Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Friday, TGIF, as we head into the weekend. A little less than 1 hour left to go in Friday's session. Thanks very much for tuning in to Breakout Investing, now 5 days a week on TFNN from 3 to 4 Eastern. The number to use to get through is 877-927-6648. Been getting some nice calls this week. Let's continue that today. Give me a call. Let's talk about this market. My show is available as a podcast on iTunes if you can't listen live, so head over to iTunes and download it there. You can listen to all TFNN programming on your smartphone. Very convenient way to listen. Just open your smartphone browser, type in TFNN.mobi, TFNN.mobi. And just click the listen button. Pretty easy. You can listen to the stream that way as well. If you want to look at charts live right along with me, you can do that, of course, on Tiger TV, right on the homepage of TFNN.com. The show is carried live on Channel 1, and it is archived on Channel 13. Folks, 2 days left for the Tiger Dollars promotion at TFNN. Purchase Tiger Dollars by September 16th. Today is September 14th, so I guess that would be, Sunday. You'll get a bonus match of 20 to 30% on your money. That's free money. You can use those Tiger Dollars for your existing newsletter subscriptions, for other products at TFNN.com. If you take advantage of the Tiger Dollar promotion before Sunday, you'll also get free access to a 5-hour live online trading workshop with Tom O'Brien on October 5th. I believe that is from 8 a.m. Eastern to 1 p.m. Eastern. That show will be archived, and Tiger Dollars will still be around after September 16th, but the match won't be as big, so be sure to check that out. All right, let's take a look at the S&P 500. About 50 minutes left to go in Friday's session. S&P right in the middle half of its trading range today. It is up almost 7 points, 0.5%, to 1460. Working on 4 straight gains. Powerful breakout for the S&P 500 yesterday after the Fed launched its third round of quantitative easing. It's going to buy $40 billion in agency mortgage-backed securities each month, and that Fed funds rate is going to stay right where it is past 2014 now. Low interest rates will be around through at least mid-2015, so cheap money is here to stay for a while. So that's the S&P 500. Let's take a look at the NASDAQ here. NASDAQ Composite outperforming, up 1% now, 30.5 point gain to 3186. And also working on 4 straight gains for the NASDAQ Composite and the Dow Jones Industrial Average. Let's take a look at that. It's lagging a little bit, up 34 points, about 0.2%, 0.3% to 13,573. So, where I'm at with this market, obviously the market's not doing anything wrong here. I know there are a lot of people out there, thinking this is not going to last. They're going to talk about September being a bad month for stocks, and it's still possible we could see some softness in the month of September. It's September 14th now. We've got half a month to go. Market has come a long way. I do think if we do get a pullback, like I've been saying, I'm going to stick to my story. I think it's going to be fairly short-lived, and I think the pullback, when it comes, will be viable. So take a look at a weekly chart of the NASDAQ Composite. Right now at 3186, its 10-week moving average is down at 3031. So it'd have to come down about 150 points thereabouts to get down to its 10-week moving average, which would be, again, a completely reasonable pullback considering the scope of the market's gains since the beginning of the summer. So pullback for the 10-week moving average for the NASDAQ composite would be expected at this point. We could get a little more liftoff in this market, but that 10-week line should be a good support level. I think that is the same for the S&P 500 as well, and we'll see that the S&P 500, the 10-week moving average is just over 1404. So those look to me to be like short-term support levels here, where if we get a pullback, that is probably going to be the support level. So taking a look at crude oil today, up 69 cents to $99 a barrel. Inside the Dow, ExxonMobil continues to trade very well in the energy space. It is extending gains up another 1% today, outperforming the Dow to 92.23. See a nice breakout recently for ExxonMobil over that 88.91 swing point right in this area here. So ExxonMobil continues to show relative price strength, as are a lot of stocks right now. And also, in the Dow, Chevron, CVX, extending gains 4 days in a row, up for this stock too, up 0.6% to 117.26. Chevron, a recent breakout over 113.87. So very similar charts, but so many stocks out there just catching a bid here. Money is cheap. Money is coming out of the bond market. You see the yields on the 10-year note now around 1.86%. Yields up again today. The yield on the 30-year bond easily takes out the 3% level, up around 3.08% now. So bonds are really taking it on the chin. When I want to kind of look at the bond market, I tend to watch the TLT, the iShares Barclays 20-plus year Treasury bond fund, breaks below its 200-day moving average with conviction today. The TLT currently is trading at 118.59. Its 200-day line headed into today was right around 119.91. So this is a broken chart, no question about it. But again, the TLT at 118.59, down 2.4% on the day. So weakness in bonds sending those yields higher. U.S. dollar index recently at 78.88, weak again today, down 39 ticks. Check in on the dollar index here, and we'll see another chart that is broken here. If the dollar's losses hold today, which looks to be a likely scenario, you're talking 7 days down out of the past out of the past 8. So dollar broke below its 200-day moving average last week. It is coming up on some longer-term support levels. I mentioned that on the show yesterday. So some will say that the dollar is starting to get oversold here. I can't disagree with that, because it is approaching 78.60 here and also 78.10. So one would think that that $78 level would be support for the dollar index, but we will see. We'll see if the dollar continues weak. That should bring more money into the stock market. Mentioned the XLF, that is extending gains. That was a big beneficiary of the Fed news yesterday. XLF extending gains. It's near its session low, but still up 0.9% today to 16.29. It is working on 9 gains out of the past 10 sessions, something like that. So nice technical breakout for the XLF. Check a weekly chart for this ETF, and you can see several weekly price gains in a row, but I wrote a piece earlier today. This still looks like it could be in the early stages of a breakout here, and that is noteworthy with the market in a confirmed uptrend. Apparently, new money coming in from the sidelines. I'm not so sure, again, that the buying that we've seen, the renewed strength in the major averages, is still short covering. I think the short covering there's only so much short covering that can be done. I think the short covering probably started in late July, continued a little bit into August. So there's going to come a point where the short covering is going to be not so much a story, but the story is going to be new money coming in from the sidelines. So I'm still optimistic about this market, only because I see, the financials, which have been doing well, but the XLF particularly looks to be in the early stages of an upside technical breakout here. But after what could be 8 straight weekly price gains for the XLF, yeah, of course, a little bit of consolidation could be expected here. This could form what is known as a high handle, drift lower for maybe 1-2 weeks, light volume. Shake some sellers out, and it could be the pause that refreshes, and we could even see renewed strength in the XLF over time. So has been an impressive move over the past 8 weeks or so. Let's see here. We didn't gold. Yeah, I didn't talk about gold. Gold for December delivery rose 60 cents today to $1,772.70 an ounce. That's the highest settle since late February. The Spider Gold Trust. Let's take a look at the weekly chart for this ETF, because it is also bullish here. Gold has made an impressive run, but again, looking at the weekly chart here, technically, even though it's working on 4 straight weekly price gains here, it still has not broken out yet. Still looking to get over this swing point here, set back earlier this year of 174. So again, do we see a little handle area form here? Do we see a little shakeout? It's possible. Could come down to the 165 area, something like that. If the pullback is in light volume, you could get a handle area form 1 week, 2 week, 3 weeks time, something like that, and then you could see the GLD take out 174 with conviction. Sometimes in technical setups like this, that handle area never forms. You never get that shakeout, and so it's not out of the question that the GLD could just take out 174. It hit an intraday high today of 172.23, so 174 right now still is a formidable resistance level for the GLD to get through. Economic data today, pretty busy day. Retail sales for August up 0.9%, a little better than expected, excluding autos, up 0.8%. That was in line, so nothing really surprising in the monthly retail sales earlier today. Consumer price index, overall prices up 0.6%, in line. Core rate was up 0.1%. That was a little better than expectations of a 0.2% rise. Despite a 0.6% rise in the consumer price index, consumer prices are only up 1.7% over the past 12 months. That danger level for the Fed is 2% or above. So at least how the government measures consumer price data, 1.7% is not a scary number for the Fed, at least right now. Also, a nice reading from the University of Michigan Consumer Sentiment Index in September. First reading of consumer confidence in September came in nicely above expectations at 79.2. The estimate was for 73.5, so nicely above expectations there. The index is now at its highest level since May. So pretty good reading on consumer confidence. Let's take a look at shares of Apple today. Apple started selling the iPhone just after midnight last night. Remember, pre-orders for the Apple iPhone 4S took about 22 hours to sell out last year, but the iPhone 5 pre-orders were gone in about an hour. So there's a lot of pent-up demand for this phone. I don't think there's any doubt that it is going to be a big Christmas for Apple. Shares of Apple up another 1.3% today to $692.02. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to Breakout Investing. Ken Shreve with you, 877-927-6648. We got about 35 minutes left to go in Friday's session. Another day of more gains for the major averages after yesterday's expected move by the Fed with another round of quantitative easing. Yeah, there's no doubt this jobs picture is still tight. Unemployment is going to stay stubbornly high. Remember, the Fed yesterday forecast an unemployment rate of 7.6 to 7.9% in 2013. So it's going to fall a little bit, according to their expectations, in 2014 to 6.7 to 7.3. So with the unemployment rate that low, that's probably the time where we'll consistently be seeing job growth of 200,000 plus. But of course, we're nowhere near that right now, and still tough sledding out there, and still challenges for the economy, no doubt about it, and challenges for Europe. I'm surprised, but not surprised to still see the negative headlines out there. It's almost like people want this market to come in. They don't believe it's going higher with the uncertainty that's still out there. In fact, I saw a headline earlier today over at MarketWatch: 5 stocks for an S&P sell-off. And I don't know. I mean, it didn't make me click. I mean, here I am looking at a market that is breaking out to new highs. Leadership is broadening out. I mean, growth stocks are acting well. It's not the time to be complacent. It's not the time to be greedy, because when money is easy in the market and you start to feel like an expert, that's normally the time when the market will kind of keep you honest and knock you back down. But still, as I've been saying, there's no reason to get overly pessimistic here. I had some colleagues telling me today to take some money off the table, take profits. I see it on Twitter, I see it on blogs. And, the bottom line right now is that if you're in the market's really strongest stocks, you do want to give them time to work. There's no question about them. You can take a 10%, 15% short-term gain, but if you do that during an uptrend without any sell signals in the market or in leading stocks, a lot of times you're just going to be getting out of a really big leader too early. So I think that I have several stocks in the Ultimate Growth Stocks model portfolio that I think have a good chance of being market leaders. I think many are still in the early stages of upward moves, early stages of breakouts, still being discovered by growth fund managers. So if you want to see what stocks are in the Ultimate Growth Stocks model portfolio, you can do that right on the homepage of TFNN.com. Click on the Newsletters tab, then Investment Newsletters. You'll see Ultimate Growth Stocks there. You'll also see my name on the homepage. You'll see it in the carousel, Ken Shreve's Ultimate Growth Stocks. 30 days free, just to see how I approach the market. So didn't talk about volume yet in the market today. Let's give a quick look here. Yesterday on the NASDAQ, we were slightly above at 1.85 billion shares. Today we're tracking even a little bit higher than that. Not by much, maybe 5%, 6%, 7%, something like that. But we could get close to that 2 billion level. NYSE volume yesterday slightly above average as well at 797 million shares. We're tracking about 5% higher than that today. So still seeing a little bit of volume come into this market to the upside. Indices are trying to hold on to gains. The NASDAQ is still outperforming. And why don't we just check in real quick here and see how the market's faring here. I noticed the S&P was kind of giving back some of its gains. The NASDAQ still hanging in there pretty good, up close to 26 points, 0.8% to 3181, trading in the top half of its trading range. S&P 500 not up that much. Tech stocks are still outperforming. The S&P 500 is actually near its session low after hitting an intraday high of 1474. It is now at 1463, up a little more than 3 points. And we'll check in on the Dow here as well. Similar to the S&P 500, near its session low after early strength, it is now up just 21 points to 13,560. So mentioned strong demand before we went into the last break. Strong demand for Apple's iPhone 5. It pre-orders sold out in no time at all. The phone is going to go on sale September 21st. So a lot of pent-up demand for the iPhone 5. I think that's part of the reason you're seeing Apple move so much here in expectation. Remember, stocks price things in advance. So if it's going to be a strong holiday for Apple, you might see that priced into the stock here. Valuation-wise, obviously still very cheap, but looks like that iPhone 5 is going to be a big seller. All right, folks, headed into break number 2. Big segment coming up next. Got plenty of time to give me a call. 877-927-6648. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing. Ken Shreve with you. A long segment here, so plenty of time to take some phone calls. 877-927-6648. First stop of the day is going to be familiar name in Chicago. Dino, how you doing, buddy? Dino, are you there?
Yes, I'm here. Can you hear me?
Yes, I can. Gotcha.
Oh, okay. Hey, thanks, Ken, for taking my call. I got a question about Mellanox.
Mellanox.
I'm not in the trade right now, but I noticed that it dropped the last couple of days, and but it's still holding like a 50-day, and it's kind of around its 10-day. I was wondering what you thought about it.
Yeah, not a fan yet. Do like the company, do like the growth prospects. I think this needs to just kind of consolidate for a little while longer. That's my short answer on it. Looking at Mellanox in Tiger TV, first of all, for those who aren't familiar with Mellanox, last time they reported earnings, they were up more than 100% from a year ago. They did about $133.5 million in the quarter. Triple-digit earnings growth. Pretty bright growth prospects as well. They make equipment, software for data center servers and storage systems, that type of thing. But if you look at a daily chart, yes, over the past 5 trading sessions, it is trying and so far succeeding, firming up at its 50-day moving average. But I'm going to swing over and, again, in Tiger TV, look at a weekly chart for Mellanox, and you're going to see a bit of an uglier picture here. And if you're not, are you watching Tiger TV right now, Dino?
No, I'm not watching, but I have it on the chart, though.
Okay.
Looking at it.
Yeah, so on the weekly chart, you can see that it actually dipped quite a ways below its 10-week moving average this week. The 10-week line is at 103.03, and it is trading just slightly underneath that right now. So it might look like it's on sale here, but to me it looks like a stock that's starting to see a little bit of distribution, which isn't surprising because it obviously had a big breakout earlier this year in April when it was trading around 40, 45 bucks a share. Runs up to 120. Just to me looks like a stock that's ready to consolidate gains for a little while, and when a stock is consolidating, it's kind of a risky time to buy. So like the growth story here, shares were downgraded last week. Not that I pay a whole lot of attention to analyst downgrades, but that's where some of the selling pressure has come from. Stifel Nicolaus downgraded the stock exactly 1 week ago. And don't forget, shares have also been under pressure because the CFO, Chief Financial Officer, is leaving the company, and that spooked investors earlier this week as well.
Okay. Yeah, because I noticed that Cirrus was in the same group, and they downgraded that, and then it came right back up, and then even higher today.
Yeah. So, and that's another one. These were actually 2 stocks that I was going to talk about on the show today. So I'm glad you brought it up. I was going to just talk about the fact that even though it looks like Mellanox is firming up at its 50-day moving average on the daily chart, excuse me, I'm not convinced it's going to be able to hold the line. I think after the gain, it's probably going to want to come back a little more in price. I'm not sure it's going to fill that gap. When did it gap up in price here? That was on July 19th. Where it gapped up over 77.69. It may not come down that far and actually fill that gap, but it just looks a little tired to me, and it looks like there's some there have been some big sellers in the stock recently, and I normally pay attention to that. Cirrus, Cirrus Logic, which makes these audio chips for the iPhone, this one is not under distribution yet, but the thing here is that it's very extended, so that's kind of the situation with this market as a whole right now, Dino, is that I'm not really seeing like fresh buy candidates out here right now. A lot of the good buys have been going on for several weeks now. So I'm kind of sitting tight with what I have and not really looking to catch too many things on sale here. So Cirrus and Mellanox, I would kind of hold off for the time being.
Gotcha. Okay. Hey, Ken, can I ask you a couple more questions?
You got it.
General questions. Hey, just right now, the first thing that popped into my head when you said extended, I always think of something that just maybe came off a good base and is kind of ascending. Is that, I don't want to miss that move. You know how they say, if the stock goes up after 3 weeks, or no, if it goes up 20%, then hold it for 8 weeks, or
right,
rule? Yeah.
Yeah. Exactly. So, we can just, why don't we stick on this Cirrus? I think I've got a weekly chart for Cirrus Logic here. Let me see. Yeah, here it is. And, so Cirrus, and looking at this in Tiger TV, the last bona fide breakout this stock has, it cleared a swing point of 31.23, and that was during the week of, it was like end of July, early August. So now it hasn't even come down to its 10-week moving average yet. So you're looking at a stock that broke out over 31.23. It's at 44 bucks right now. So it's really uber extended in price. Now, if it comes down in light volume and tests its 10-week moving average at 37 bucks and finds support, which is a likely scenario at this point, at 37 level could be a nice entry point. But it really depends on the nature of the pullback. What I'm seeing right now actually is not so many stocks that are coming out of bases anymore. Panera Bread just recently did, but that's really been the exception and not the rule, because a lot of these base breakouts have been going on for several weeks now. Now what I'm looking at is, maybe a name like Cirrus, what are these stocks doing after the breakout? Are they going to come back and successfully test their 10-week moving average? Because when you're in a market uptrend, that's very typical action to see. So I think there's a lot of candidates out there, Cirrus included, that could eventually find support at the 10-week line.
Gotcha. Okay. Hey, so. and then one more real quick one for you is, while I got you on, is I've been looking at some stocks, maybe, and I'm going to be looking at some over the weekend that look like they got good setups, but they just didn't participate in yesterday's jump. How do you go about thinking of that? Are they laggards, or are they just sleeping a little bit?
That's a very good point, because you want to be very careful of buying breakouts that are potentially laggard breakouts. Again, there are very few base setups out there. There are some, but and again, I use Panera Bread as an example. I'll just pull up a chart of Panera here. Because this was actually a recent base breakout earlier this week. It broke out over 164 in heavy volume. It's showing nice follow-through. But again, the real base breakouts, a lot of these started happening in late July and early August. And this is, that your early breakouts tend to be your big market leaders. And if you missed the breakouts in late July, early, mid-August, you're going to get an opportunity to buy these stocks at some point, but at this point it's going to be which ones can successfully come down to the 10-week moving average and find support. That's, again, I know I'm kind of, talking about that point a lot, but it is kind of where we're at right now. I'm really not looking at base breakouts, cup with handle patterns. They're just not really around right now because the patterns formed several weeks ago. Now, some bases you'll see in coming weeks, perhaps these breakouts that have been happening. Some are going to start to move sideways, and then you see these flat base structures form where a stock, moves sideways, doesn't correct more than 5 to 10% off its recent high. So flat bases are something something to watch for in coming weeks as well.
Great. Okay. Hey, thanks, Ken, for answering all my questions.
All right. Hey, you're doing some homework over the weekend. Give me a call next week. We could to take a look at some stocks that you're looking at. We'll help you analyze the base. So, feel free to give a call.
Thanks, man. Thanks, Ken. I hope your ankle gets better too. So.
Oh, thank you. Yeah, I'm a few more weeks. I should be good as new. Appreciate it.
Yeah. Okay. Bye-bye now.
All right. Thanks. All right, Dino from Chicago. Yeah, I mean, listen, that's what this show is for. If you're doing your homework over the weekend and you've been looking at some growth stocks and you're not sure if it's a healthy base or not, that's what you can use. The number here to call in, ask questions about a stock. I can't tell you to buy it or sell it, but I can help you analyze the base, tell you if it's a fundamentally and technically strong stock. So. 877-927-6648, and I also provide a lot of education like this, not only on the radio show but in my newsletter as well. So don't forget 30 days free of Ultimate Growth Stocks. You can get more information right on the homepage of TFNN.com. All right, let's check out shares of Fossil. This is a stock making a nice move today. You can see it's stuck underneath its 200-day moving average here, still about 32% off its recent high. So this is, a stock that's trying to break out from deep inside a base. It is up 10.5% today. I didn't see any news, but recently trading around 92.86, trying to break out of over a swing point of 93.45, and it's going to be interesting to see if it can reclaim. You can see it's just like a ceiling here, this 200-day moving average. So this is a tempting one to buy on a breakout attempt, but I typically don't touch stocks that are trying to break out, when they're 30% off their highs. Upside breakouts, stocks showing relative price strength that are holding closer to highs, usually within 5 or 10% of a high. Those are usually the stronger ones. So a lot of technical damage done to Fossil, but interesting price action today. The stock is outperforming nicely. Here's a name interesting to watch, recent price action in Equinix. The stock soared yesterday on news that it's going to convert to a real estate investment trust by 2015. They get big tax benefits with that. They're going to return a lot of profits to shareholders. The stock hit an intraday high. I think it was $212 a share yesterday. It reversed and closed all the way down to at like 12 points off its high. Now the stock is down another 5 points today to 195.41. So kind of strange action in Equinix. This is a company with very bright growth prospects. I talk about Equinix a lot just because earnings this year are expected to be up 56% from 2011. Next year, up 44%. So it's a company that leases space to companies like Amazon and these big tech names that are handling massive amounts of data. These companies put their servers in these Equinix buildings, and that's why they're called a data center operator. But Equinix looking a little toppy here, frankly, after a pretty nice price move. And I saw this stock up yesterday in the pre-market, up 20 points, 25 points, but the enthusiasm was pretty short-lived. Taking a look at shares of Lululemon. This is a stock that really I thought was left for dead, but boy, this company had a big earnings report last week. You see the big move the stock made, and it is holding gains nicely. Now working on 3 straight up days, up another 1.1% to let's see, 78.05. So Lulu has really improved its technical picture quite a bit. And frankly, its earnings report, this is a stock that has a fairly high short position, so I'm sure the shorts were in there covering last week on September 7th. But their earnings were solid. They were up 31% from a year ago to 34 cents a share. Sales were up 33% to 282 million thereabouts. So Lulu looking pretty strong here. And how about shares of LinkedIn? This is a current holding in the Ultimate Growth Stocks model portfolio. Stock is off its highs today, but finally breaking out. You had a breakout last week over $113 a share. It is up another 2.9% today to $122.94. $122.94. When LinkedIn debuted in May 2011, it hit an intraday high of 122.70. And ever since that point, that first day of trading, boy, it came down in price. It corrected. It never really ever got back to that 122.70 intraday high. But interesting to see LinkedIn finally taking out its all-time high. Today it hit an intraday high of 125.50. The stock looks to me like it's under accumulation. I think this is a legitimate growth story in the market, and it's a volatile stock, but if you've got earnings and sales growth that is in place and driving price performance, and you buy at the right time, you can afford to sit some of the volatility out. But LinkedIn finally coming to life here. Let's take a look at a weekly chart for the online professional network, and we'll see just a good solid technical breakout here, arguably still in the early stages of a move. You can't really say you're chasing a stock like LinkedIn, even though it's up for 3-4 weeks in a row. Look at the chart here. I draw this line, and you can see it's just in the early stages of possibly an upside breakout. So, excuse me, LinkedIn acting pretty well here. Also, Salesforce.com, another stock that's leadership broadening out every day in the tech sector, up for 4 days in a row. Definitely a little bit extended here after a recent breakout over 151.97. So you don't want to chase. You want to be very careful not to chase stocks. The market has been running higher. We could come in here if we do get a pullback. It might even look pretty severe. But if you're in the right stocks, you probably have some decent cushions where you can again sit the selling out. Try to let your winners run as much as possible. That's the most important thing. Nothing wrong with taking profits here and there, but make sure you're taking them in your middling performers. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back to Breakout Investing, everyone. Final reminder, 2 days left where you can take advantage of the Tiger Dollar promotion at TFNN.com. Purchase Tiger Dollars by September 16th, and you'll get a bonus match of anywhere from 20 to 30% on your money. You can use that. Use the Tiger Dollars for existing newsletter subscriptions, however you'd like. And if you take advantage of this offer, you'll get free access to a 5-hour live online trading workshop with TFNN Chairman Tom O'Brien. That'll be on October 5th from 8 a.m. to 1 p.m. Eastern, and he will show you how he trades using a live account. All right, checking in on the markets here as we head into the close. Hope you all have a great weekend. The Dow right now up 25 points, 0.2% to 13,565. NASDAQ up 24.5 points, 0.8% to 3180. S&P 500 up a little more than 3 points to 1463. Taking a look at some other stocks here. Let's check in on shares of Zillow. This is another tough stock to handle, like the growth prospects very much at the online real estate firm. There aren't too many companies out there that are expected to grow annual earnings by triple digits this year and next, but Zillow is in that group. But pretty ugly day of price performance here. This is a stock that thought had a chance to break out over $44 a share. Has a lot of characteristics that I like to see in a stock. I don't own it. Had a big day yesterday, up huge on news of the Fed announcement, but then it reversed today in heavy volume after hitting an intraday high of 45.50. Looked like a good solid upside breakout was taking place. So you still are seeing some failed breakouts here and there, but they're really the exception, not the rule, which is another feather in this market's cap in my view. But shares of Zillow today down 3.25% to 42.83, well off its intraday high of 45.50. Let's take a look at IACI. This one kind of fell off my radar for a little while. Now it is back on because I like this technical setup. This is we were talking to Dino in Chicago earlier in the show, and some of these stocks that could be laggard breakouts, and I'd have to put IAC in this group, even though the stock is up close to 1% today to 52.62. It is sitting just underneath a swing point here, right around 54. But let's take a look at a weekly chart here. Nice technical setup. It could work, but again, you've had so many stocks acting well. IAC actually broke out several weeks ago. The breakout day was actually in late July, and it has come back down to its 10-week moving average here. So nice technical setup. Possibly a late-stage base here, so if it does take out that 54.20 level in heavy volume, buyer beware. This is one where I wouldn't be surprised, I wouldn't be afraid to take a quick 5-10% gain if I had it here. It has come a long way in recent years. Technically still looks okay, but whether or not it can successfully break out over 54.20 remains to be seen. Have some interesting IPOs coming up this week. Trulia, TRLA. Make a note of that ticker symbol, TRLA. It's pretty much the same business as Zillow, online residential real estate marketplace. Trulia plans to raise $90 million by offering 6 million shares at 14 to 16. Don't know what day it's coming public next week, but we'll keep an eye out for that one, TRLA. In terms of earnings reports next week on Tuesday, we've got FedEx and Manchester United. Recent new issue coming out with earnings Tuesday. Wednesday, Bed Bath & Beyond, Adobe Systems, and Thursday, results from Oracle. Hope you all have a great weekend. Thanks very much for listening as usual. Tom O'Brien Show coming up next. I'll see you back Monday, 3 o'clock. Breakout Investing. Take care.
Time is the